my name is Eddie Tofbik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I will stop looking at my daily charts and instead concentrate on the longer term view, using my monthly, even yearly charts to commentate on a market. If you would like to discuss any of these, I'll only too happy to hear from you. So let me now introduce today's longer term chart. Today I'll be looking longer term at New York Sugar. The year 2020 was that rarest of beats, an annual key reversal up. And from this rare pattern, all subsequent moves higher flowed. It set the stage for 2021 with a move up over the more important 50% absolute Fibonacci line for the 21st century at 1809. This was all done by September of 2021, but then the market started going sideways, breaking through the extension of the 2019 to 2020 diamond pattern uptrend trend line in December 2019, yet then not reverting and going lower as a follow-on, instead just going sideways. This seemed to be a disappointment to the diamond bottom pattern of 2019-2020. As in previous years, I'd given a potential target X for this pattern in the 2140 area. This was the full and secondary hardest reach target for the diamond bottom pattern. The primary target in the 1910 area was easily reached in 2021. However, by the start of 2023, prices have come out of their sideways torpor and moved higher with a monthly key reversal up in January that year, easily reaching target X. This then gave the opportunity to look at the whole action since the low at the start of 2020 as a potential bullish halfway hesitation. And by March of last year, things were set to go that way, with a combined bullish engulfing pattern and monthly key reversal up, if only just on the latter. This gave a potential target X1 in the 28 even area for this bullish halfway hesitation. The first attempt higher was unsuccessful, with a pullback lower in May and June last year. However, the bullish piercing line pattern in July saw prices reach up and achieve target X1 in November. But this achievement had a bitter aftertaste, as it was a bearish engulfing pattern and prices fell away, especially at the end of last year with a bearish opening long black Mariposa. The drop was large enough that if November and December had happened 2 months earlier, in January and February 2024, then I would have been wary of maybe another annual key reversal here, only down instead of up. Yet it was not, so for now the market is clear of that obstacle. What held the market up at the end of 2023 was the rising 3-year moving average, currently at 2044, though I do not know for how long as yet. This brings me to my other point, which is a reprise of a major pattern I noticed 3 years ago. I'll quote from my annual commentary from the start of 2021. So, in September we had a bow tie formation of the moving averages. Currently it looks superficially bullish. However, the moving average involved the 2-year moving average, that's currently at 2160, the 1-year moving average currently at 2418, and the 3-year moving average currently at 2044. Went into it in the wrong order. Nevertheless, this is potentially a very bullish indicator for the future, as it will suggest a significant action, potentially bullish, in the next 15 to 20 months. That is somewhere between March 2022 to July 2022. This is something to place in the future diary or note on the future calendar, assuming it plays through. End of quote. Well, as you can clearly see, between March and July 2022, we did nothing bullish, just sideways. And one must say this pattern, which wasn't that perfect to begin with, had failed. However, there was, as I previously stated, no significant pullback low, which left the question open somewhat. It was only at the end of 2022 that prices finally moved higher. In all truth, I cannot attribute this move up at the end of 2022 to the bow tie formation. So despite the significant moves higher in 2023, they are not related in my mind to the bullish bow tie formation. To do so would be insincere. Finally, the action during 2023 has set up the opportunity for a double top pattern, Adam and Eve type. It's not the best looking version of such a pattern, but it has some merit. Thus it sets a primary target X2 in the 1880 zone and a secondary, harder to reach target X3 down in the 1660 zone. Thank you for watching and listening. This annual broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final bit.